5th of March 2020. Today is a very, very sad day for the Indian banking system, whether it's private sector banks or public sector banks. Yes Bank, the fourth largest Indian private sector bank, was put under moratorium by the RBI and the Government of India. This is no small bank. It has deposits worth 2,09,000 crores and borrowings of around 93,000 crores as of the September 19 balance sheet. That's the last one that I could find. Together, depositors and borrowers are around 3 lakh crores. The corporate lending book of Yes Bank as of September 19 was around 1,77,000 crores, which basically means, and its reserves and surplus was around 27,000 crores. What that means is that if 15% of Yes Bank's loans turn bad, 1,77,000 into 0.15 is around 26,000 crores, its net worth would vanish. And in absence of it not being a public sector bank, the bank would be in trouble. And RBI and the Government of India have really not done a bad thing if that was the case. The question is, why did the 15% of its corporate banking book, which is around 27,000 crores, go bad to the extent that none of it was recoverable? The answer to that lies in maybe the way we have seen resolutions happen under the IBC, which is so touted about as a hallmark reform. The IBC has really worked well in 2 or 3 cases where recoveries have been around 60 to 70%. In most of the other cases, because of the way it is structured, the haircuts that the banks have taken of loans have been 70% to 80%. Alok Industries, out of 20,000 crores, the banks recovered 5,000 crores. Reliance Communications, out of around 93,000 crores of debt, we don't know how much is going to be recovered actually. Who has lost in Yes Bank? I hope the depositors and borrowers don't lose. First the depositors. But do you know the equity shareholding pattern of Yes Bank? Only 8%. Yes. Only 8% of equity is held by promoters. The rest is held by the public, whether it's FPIs, individuals, FIs, banks, NRIs. Individuals alone, out of a floating market cap of around 7,000 crores, own 4,500 crores of Yes Bank equity priced at 38 rupees, which also has come down from around 350 rupees to where it is now. Just because Yes Bank is a private sector bank does not take away the fact that we have messed up. We have messed up the basic tenets of the IBC and the AQR, which was to encourage the promoters to get the projects on track. The problem of Yes Bank is not a banking problem. It's a problem of accounts going bad because they cannot generate the cash. Vodafone Idea is one of the accounts of Yes Bank. If it's not, I'll be happy, but I think it is. Is it not preposterous policy to have data rates at 1/10 or 1/9 the world global average? Is it not preposterous to ask for penalties and interest on those penalties in 1 year instead of spreading them out? Think about it. Can a third party country from which India has borrowed money ask them to pay everything in year 1? Do not treat our own people like they are aliens. They support families. The solution to this problem is not only to recapitalize Yes Bank. The solution of this problem is to hardcore understand what we've been doing and our approach to corporate stress. The telecom sector is under stress. Sort it out. Amortize the payments. Give confidence to the corporate that the Government of India is responsible. It will take its money, but it will take it in a time bound but yet a manner in which it will be conducive and win-win for the investor, for the corporate, and for the government. Power sector. What have we resolved? Do we not need thermal power? What's our oil bill today? The coal pollution control equipment costs $12 billion, but we don't want to do it in spite of having the highest reserves of coal in the world. We're just not looking to solve problems. We're looking to just take a problem from one head and put it on another head, manufacture some money, but not resolve the problem, just like we do to the farmers. Just like that. You give the farmer a loan, very well knowing that he may not be able to repay it because the product that he produces may not be sold at a profit. But the farmers, poor men, and I actually bleed for them, they till their fields thinking that they can sell, but they can't sell. But you give the same loan to the same farmer for the same crop again. So every year there are farm loan waivers and farmer suicides because we can't solve the problem. And that rot is now coming to the corporate world simply because we don't want to solve anything. We either want someone else to buy it and solve it, and buy it at whatever cost or whatever price, and then do what about it? He's bought it at piddles. If it doesn't work, he'll throw it off again. You know why? Because out of the 20% that he is paid, 65% is still funded by banks. So the banks lose more. Solve the problem. The problem is in corporate stress. The problem is in structured debt. The problem is in cash flows. The problem is in real estate. Get those projects going. If you can't get it going, get the promoters to get it going. Help them out. Antagonistic attitudes don't solve problems. You need to work with them. One has to be firm. Appoint the right people to see that the money is not getting diverted. That's fine. But a person who's been doing his business for 10 to 15 years, who has diverted money and still knows his business, it doesn't mean that he doesn't know his business. You can always appoint people to monitor the divergence and see that the money sticks on track. Please do it. We are not on the right track. Today it's Yes Bank, tomorrow it could be some other. Let's try and sort the problem out. Thank you for watching the AK75 Show, and please do subscribe to my channel and like the videos. Until next time.